Welcome to the Closing Beat, everybody. Happy Monday. How's it going out there? Hope you're having a great day here so far. This is a quick show that we do for our customers as well as those of you that want to watch and play along. Try to help you teach what the markets have done today. We try to always share something new so you learn something maybe you didn't know before, and we'll try to squeeze that in here for you today. I appreciate all you guys watching. I know it's a holiday sort of time period there, and most people probably got things to do. You're probably traveling, so we'll keep this one short. We'll dive right into it there. Hey, let's mention the game. You want to play a game? It's called Guess the Dow. You go to jazzwealth.com/guess the Dow and tell me where you think the Dow is going to close next week. If you're correct or the closest without going over, we'll send you a $100 gift card. Our winner last week was a customer. That's 3 weeks in a row that our customers have won. There's no bias there, right? Closest one gets it. Bruce was our winner last week, so $100 being credited to his account. If you're one of our customers and you would like to have your account credited, you can, of course, specify that on the form when you fill it out on the website. Also, there'll be no closing beat tomorrow or Christmas, right? Tomorrow's Christmas Eve, and the next day is Christmas. The market is closed. And so we'll be joining you back on Thursday. So I wish you all a very Merry Christmas if you celebrate Christmas, and Happy Holidays to the rest of you. We'll be back on Thursday. Enjoy a few days off there. Let's get started here with the markets. You got the Dow higher by 96. That was your best performing index out of the day. A little bit of a disconnect between that and the S&P, which was only up 2, and the NASDAQ was up 20. You always ask, why was there a disconnect? Why do we got 1/3% gain on the Dow and basically flat on the S&P? Well, today that's largely going to be because of Boeing. Close second was 3M, by the way, and Apple helped out a little bit as well. We'll cover those here in just a little bit. If we go take a look at the overall stock market, nothing new. We're in a very tight and consistent uptrend. I got an interesting study to share with you a little bit later here, but for the moment, we're just sitting tight in a nice uptrend here. Very, very calm and consistent. Volume way lower than average, which is actually normal this time of year as people get into the holiday spirit there and do their traveling and whatnot. Here's the NASDAQ sitting at new highs as well, just a constant little bleed up, and the Dow sitting at highs as well. Very slow sort of day all around, very quiet. You expect to see that tomorrow, and then you'll probably see that Thursday and Friday as well, to be honest. But nonetheless, hey, good days here across the board. People pretty much happy. If you're a bull, looking good there for the overall stock market. The Russell 2000, by the way, up again. That's up 9 out of the last 10 days. So the Russell 2000 doing quite well there, which is great because we spent the whole summertime in the latter part of the coming out of the summer with Russell not doing a whole lot, so playing catch up here towards the end of the year. Very happy to see that. The S&P 500 is now up 8 of the 9 last days. Very strong market, although strong in the sense that it won't pull back, right? It's not like we're blasting off here to new highs, just overall really strong. All right, a couple things to share with you. 10 of the last 12 months, or 10 of the 12 months this year produced a gain. Did you know that? There were only 2 years that did not. It was August and May. August and May were the only two. Here, we could just go to the charts. August and May, the only 2 months that gave us a negative decline there. There's May, and here is August. January, believe it or not, was the best month out of the year. 7.87% gain coming off of that decline that we saw last year. May being the worst performing month, which was down 6.58%. And I want to share something with you. The most volatile days of the year were the first and second and third trading days of the year in January. If you know, so the second trading day of the year, the S&P lost over 2%. The very next day, it gained over 3%. So 2 of the most volatile days of the year. And historically, the 2 most volatile days of any given trading year, going back to 1928, are the first available trading date of the year and the second. So very typical to see that sort of thing. I am excited to see if that sort of plays out this year, given how quiet we've been for the last couple weeks of the year here. So that's it. Quick study, by the way. No time to put it in like a fancy chart, but if you could only pick one day each week, right? And throughout the entire year, you bought in the morning and you sold at the afternoon. What do you think the best day was? Meaning the market's open and you bought just blindly. You bought the S&P 500, whatever day you picked. And then right before the close, you sold it. What do you think would have been the best day to perform for you there? I wouldn't have guessed it was Friday. So Friday would have been the best performing day to just buy the market and sell it all in one day. Every single Friday, if you did that, actually used to be kind of a popular trading strategy back in the day. So I bring it up. The average gain on any given Friday was 0.25%. So if you did that, every single Friday throughout the entire year. Not that you can now, but if you had done that, you would have averaged a quarter-point gain off their long run there. So it was actually a quite profitable strategy there. Second best performing day was Thursday, and then Tuesday and Wednesday was the best, come in third place. They tied. The worst day would have been Monday, of course, so it actually goes evenly all the way back there. I say all of this because I want you to know there's a lot of good out there right now, and it came from a lot of bad, right? We're going to see bad at some point, and I want you to know that that bad turned out to be an opportunity. So when we go into the next bad cycle, whatever it is, you got to recognize that as an opportunity rather than a reason to be scared. All right, let's go over to our sector breakdowns here for the day. All right, you got your biggest movers over the last 5 days. Communication services. That was your best performing sector over the last 5 days or last week, 2.61% gain. Your widest moving sector was utilities. So that had the biggest move from lows to high on the week today. It reversed quite sharply, down about 1%. But that was your biggest moving sector. Your third best moving sector last week, although it was still positive, 1.75%, was REITs as they came off that bottom. So the biggest range from low to high. That was the third place winner there. Your worst performing area last week, your worst performing area was industrials, just a small tiny pullback there of 1/3%. It was one of only 2 sectors that were negative over the last 5 days. Financials were the second, came in second place as the worst performing over the last 5 days there. So there you go. If we go into some of the different areas of the market today, gold posted a 0.5 point gain today. Uh-oh, look what's going on here. It's getting above this high, right? It's starting, we got to put that line right about at these highs. There you go. So starting to get back above these highs. We talked about this on Friday. Whatever it breaks first, above or below, you expect to see the action kind of follow through, the momentum to the upside there if that's the case. If it happens to break towards the downside, you'd expect to see selling pressure to the downside there. Today was a good push back up into those highs. That's good news. The oil explorers, I know some of you are playing along here, so I keep following with it. The XOP, oil explorers there, just won't quit, up 2.15% on the day there. Really cool just to kind of watch that come off the bottom. Semiconductors did pull back about 1% there. Semiconductors and financials did not participate today. If you want the S&P to go higher, you need both of those sectors to be solidly committed to one direction. Well, hopefully higher. If you want it to go lower, you need them to be solidly committed to the downside. They just didn't participate today. All in all, pretty flat day. And so when you go look at the S&P, every attempt that it tried to move higher today just couldn't do it. There was just no gas in the bulk of the areas of the markets that you needed to move the thing higher, and so we didn't get anything there. Regional banks didn't help either. They pulled back a little bit, but I don't think most people care. So a recent breakout here, so a lot of people play the breakout, and then a lot of people will wait for it to pull back, and they'll play that pullback. So right now you got people, technical traders, licking their chops in terms of being able to participate, or hoping that they can participate there in the regional banks, if you follow along there. Homebuilders pulled back a little bit, continues to be in a choppy range, not too big of a deal. And REITs, that moment in time, we talked about it on Friday, that rally up into the moving average, that was great. That was cool if you wanted to see it bounce. But on Friday, we said that was a moment in time. It needs to make a decision from this very moment. And you could see people just not willing to come and try to bet on this thing moving higher. So they had some profit taking today. It's a very textbook sort of technical sell setup that a lot of people like to look at. So that is your, industrials. We did that one. Yeah, industrials a little bit higher today. That's going to be Boeing, and that's also going to be 3M. They got an upgrade in the mix. Was it? Yeah, 3M got an upgrade at JP Morgan. So looking good there. Let's go over to some stocks. Boeing is going to be the #1 stock in the news today, added about 3%. They fired the CEO. The board of directors said a change in leadership is needed to restore the confidence. However, the guy that's taken the place, it's not like a new face. He's not like, I don't know, like, was he just quiet and not giving confidence in the background there? Anyways, so they're going to get a new CEO, and hopefully this guy can use the word safety a lot. Hopefully the word safety for Boeing is as is the word recession is to the market next year. So we'll see. Nonetheless, Boeing a little bit higher today. If you happen to be trying to pick the bottom on that stock, you're happy today. Nice reversal there. It's got a little bit more room to run up into the mid 340s there before you see any sort of technical selling. So hope you enjoyed. China Mobile got a boost today, up about 0.5%. It was in Barron's over the weekend. Barron's basically said that this stock is currently very discounted relative to the other U.S. 5G players in the mix there. So it's already started to come up off of its lows there. And they also highlighted the dividend. This pays a 4.73% yield. So looking pretty good there. It's down about 14% on the year, but 5% up off of its lows. So people trying to pick the bottom on China Mobile, ticker symbol CHL if you want to play along. Disney was a little bit lower today. Star Wars, apparently $176 million out there, but the previous one was like 212, and the one before that was like 250 at this point. So it was seen as sort of a disappointment. However, I think the top 6 grossing pictures this year for generally, just like the U.S. box office in general, were all Disney. They'd all grossed over $1 billion. So they're not hurting. It's just maybe this recent Star Wars here wasn't as big as a hit so far as they intended. So we'll see. Lockheed Martin broke back up to those new highs there, or almost got back up to the new highs. They got like a $2 billion contract, like $1 billion from the Navy and $1 billion from somebody else as well, maybe the Air Force, but just incredible. We happen to own the stock, so a nice little boost for Lockheed Martin today. Nice to see that. Saw FedEx try to recover a little bit of the earnings drop from the other day. Not bad. People just picking the bottom there, up about 2.5% on the day. And Apple, there you go, hit new 52-week highs today, 1.63%. Wedbush came out with a bit of a research report on the prospects of 5G going into the future, and they say, you know what, we're going to raise our price target from $325, which was already well beyond where we're at right now, to $350. So they're very optimistic on that. That helped the shares move a little bit higher on the day. Speaking of research reports, hey, it didn't do too bad, actually. Are we getting the latest data here? Yeah, all right. So Uber closing well off of its lows, actually. Oh, I'll just call it flat for the day. It lost 12 cents. KeyBank put out some research showing that the ride-sharing app, just in general, not only Uber, but ride-sharing in general, is starting to slow down a little bit, and they said with Uber they expect this to continue. Also, Uber had to stop operations in Colombia, I believe it was, because they're not following the rules over there, or at least that's what Colombia says, so you had that in the news as well. Tesla pushing to ever new highs again, back to that 420. Remember that magic number where Mr. Musk tweeted before that he had the Saudis were going to buy him out for $420 a share? Well, they're at $420 a share today, so Tesla a little bit higher. They're taking $1.5 billion, 1.4 billion or so, in loans from the Chinese government, so that's obviously good news for their Shanghai factory. Stock was up 3.3%. So that's what you have for most of the stocks in the news today. 78.4% of the S&P is above the 50-day moving average. That's a small downtick from Friday, but not too bad. We were at 80%. We're still near highs in the short term for the number of stocks above the 50-day moving average. You had 39 new 52-week highs today. That's on the lower end, right? We were at 77 on Friday. So starting to creep down just a little bit. I'm going to blame that on the lack of volume today, the holiday sort of season there. A couple notables you might want to know about. AMD and a lot of semiconductors did well today. 3% gain for AMD. That is the best performing stock on the 52-week high list today. Intel was in the mix as well, broke to new highs also. You got Micron Technologies just ever extending itself here little by little. And SWKS, same thing, very extended in the short term, but it added another 1% on the day. Newmont Mining hit new 52-week highs. That's because of gold. Well, the gold miners had a great day today. 3% gain for them. Just a little bit of strength there in the gold area, and a lot of people starting to play that gold mining space. So that if you look at all the stocks in that area, just getting a little bit of a bid there. I'm not sure why just yet, but Newmont stuck out as one of those. Royal Caribbean, which we happen to own, continues to rally there, up almost 2% on the day. It'd be okay if this pulls back. So a little bit extended. You've got the biggest range days near the high of where it's at. That's not a good sign in the short term. You expect to see that pull back. It's okay if it doesn't, but you just, got to be ready. We talked about Apple hitting new highs there as well, and Raytheon. Raytheon hit new highs as well. So Raytheon looking good there. They also were awarded, was it Raytheon? It's a good day for them. I can't remember what the deal was with the contract they got as well. Anyways, that's the 52-week highs for the day. You had no 52-week lows today. Another day of no 52-week lows. I'll share a little bit of research with you here. Before I get to that, you got Philip Morris paying out 84 cents and Constellation Brands paying out, or Seagate Technologies paying out 65 cents in dividends there. So looking good. Looking good. All right. So look, got a little bit of a study to share with you. Funstrat put this out. This is not our study. Basically what they did is they said, hey, you know what? There was a time, if you look back from March 2017 till January of 2019, all that time had passed and the market had only gained about 5%. And it was one of those weird times. I remember talking about it a lot, saying, you know, you see people talking about the markets being higher. However, if you go back a year, it's like they're not really that high. It's all that not that exciting, so don't get too excited. What this guy did is he went back and he said, all right, let's look at every moment in time where the market had at least a 20-month time period where it was that it only gained 5%. So a lot of chop back and forth. But to add to that, he said, in that same 20-month time period, we also want to find a 20% drop. So we want to find moments where people were panicking, sort of, in the short term, but where the market's only returned about 5%. And the idea was to look at those moments in time and see what happened after that. Is that anything we can go on? Now, the reason we picked that time period is because that's the closest thing in history that we have to say. Okay, we had a 20% drop with a 5% gain overall. So the 20% drop was right smack in the middle of that mix there. And the markets have taken off since, really, right? It's been a great day, or a great year. So the idea was to say, what happened in the past? Is there more upside to come, or is this pretty much it? Did we reach the end of the mix there? So here's the data that they sent, that they shared here. There's a lot going on this page, but let's start over here to the far left. Back in the recession of 1953, they highlighted the area where there was a 5% average, or 5% gain in total, but there was a 20% drop in the midst of it, so where people were basically thinking this is the end of the market. Well, what followed was a 73% rally before we pulled back. This is the S&P 500. If you go to the next one here, 83 to 84, we had a 4% gain and we had a 20% drop inside of that. You had a 50% gain just after that. Most recently here, 2014 to 16, we had just over a 2% gain, but we had a 20% drop in the mix and a couple nasty ones in between, I might add. And following that, we had a 30% rally. From the same time period that we just talked about a second ago, we had a 5% gain with a 20% drop inside of it. The idea was, hey, he was predicting that the markets are going to continue higher. Now, to be fair, that was when we were up only 5%. Year to date, we've added 30. So if you add another 25 to the mix there, you get about a 30% gain. Basically, what he was saying was, we've already had that rally, or we're very close to already having that rally, and any upside from here might be in the low double digits. So I'll leave it to you guys. You could also look at that as a sort of a contrarian view as well, to say, well, we've already kind of done this whole rocket ship icon that he put there, so maybe a little bit more, and then what happens after that. But I thought it was an interesting study that I would share with you if you care to take a look. It's not as clean as some of the studies I like to put together, but nonetheless, that was what got a little attention today. So I thought I would share that with you. What else do we have here? A couple other things. I'll take your questions if you have them. Netflix pulled back about 1% today. Totally fine, right? That was very extended. You expect it to pull back a little. If the markets fall, you'd expect it to fall with it. Not a big deal there. It's had a great run. Also, ConAgra. No,
hey,
I
wait,
did it again.
Before you go.
ConAgra was one of the, yeah, there we go. One of the stocks that made new 52-week highs today, but it was the worst performing stock on that list. But we give it a break because it's had a great run, right? The earnings gap and run higher, the second day following through there. It's just now seeing a little profit taking in the short term from your momentum players out there. And that's what you have. So I'll take a second here, see if I can answer some of your questions. You see what I did? It's a good thing we're taking a break. We could take a couple days off. All right, let's see what I can help you with here, and we'll take it from there. Yeah. Cool. Next 2 years, Tesla will be out of the S&P, and then it's off to the races. Harry's a bull on Tesla. There you go. Chris wants to see more rocket ships and graphs. I know. I don't get to put icons. I barely forget to remember to put the logo in there, but I could probably squeeze in a rocket ship for you if you like. I love it. It can't be a Boeing rocket, right? Yeah, I won't get there. I love it. Those poor guys, man. I feel bad for the people on the space station. They were supposed to get Christmas gifts. That rocket is floating around there. They're not going to get their Christmas gifts. Kind of sad. You topped off your Roth today. You lazy and waited till the last minute. Well, technically, you had till tax day, right? Last day to fund your Roth IRA or traditional IRA for 2019 is actually April 15th, 2020. Sorry they do that, but it's because of taxes. Yep. I love it. Cool. Oh, by the way, yeah, I saw Was it Aurora Cannabis moved to new? Yeah, down 10% today. Is that what you posted there? Harry, yeah, down 10%, which is, it's 24 cents, but back to the $2 mark. They're changing up some of their C-suite sort of things in there. Right? They got a new chief compliance officer or chief something officer. So shares a little bit lower as well. I think that hurts some of the other ones as well. Yeah, Tilray down 1%. These are tough areas, and believe it or not, still overvalued, in my opinion, despite being beaten down like that. So, yeah. If you had to guess, do you think Netflix would drop again tomorrow? I mean, if you had to pick a direction, that's the direction I would pick. I can't say for sure. I mean, obviously it's a 50-50 shot, but I would think that if it did pull back, nobody would care. You'd still see some profit taking going in tomorrow, especially if there's any hint of weakness. I know the markets don't fall anymore, but if there's any hint of weakness there, yeah, I could understand that. Paul says, taking an IRA distribution, would you take it from cash, cut your biggest loser, or profit from a winner? So I'm assuming you mean you are of retirement age, you are taking the money out of your account. Would you take money out of the losers? Would you take money out of the winners, or take it from cash? If you had cash, I'd take it from the cash. Maybe second would take it from the losers if you had the opportunity. If you had to take something before the end of the year. Yep. Now again, I'm assuming that's a qualified distribution, which I'm assuming you're asking. Yep. Got a class on tax loss harvesting. I don't think so. It'd be a good one to do for our Wine and Wealth. I would agree. We do all the tax loss harvesting here for you, but if you have like a outside account or something, that might be helpful. I could agree with that. Yeah. You're going to start shorting the pot stocks? The problem is they're so costly to short. Backdoor Roth deadline. Got to get those in. Yep, end of year. Okay. Yeah, there you go. All right. Let's see. What do we have here? I think I've answered all the questions. You guys are off to enjoy your holidays there. We'll be working on some stuff here in the office. But, hey, no closing beat tomorrow. No closing beat on Wednesday. It'll be the same next week. New Year's Eve, New Year's Day. Same thing. It'll be kind of quiet there, so enjoy the time there. We will, of course, be back all the other days. Enjoy the rest of your day, and a sweet Merry Christmas to all of you guys that are out there. Enjoy the holidays. Enjoy the time. Be safe, and we'll see you back again on Thursday. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.